Nvidia is the next one. Jordan and Tom again, our patrons, love you guys. Nvidia.
Nvidia is pretty awesome. 330 billion.
It's a lot.
Big company. 88 PE. So X there. So big PE. Look at this profit margin. Oh my lordy. That's huge.
Revenue growth over the past 5 years, Paul. Revenue
All right.
growth.
This company's doubled. 5 to over doubled.
Did you ever get to profit? No. Profit growth?
Right here.
Go ahead.
614, 1.7, 3, 4.4, 2.8. Check mark. Again, it's down a little bit, but still growing and growing by a lot. They must have done some acquisition.
Number of shares outstanding. We want the number of shares going down.
And just like our friends at AMD, it's up.
Oh boy.
Just like our friends at AMD.
Current assets over current liabilities.
I bet you this is gonna be really good, guys. Current assets, 14.4 billion. Current liabilities, 3.7. Total assets, okay, guys. We got ourselves a winner here. We got the major check marks. They have way more cash on hand than all liabilities. Now let's go to free cash flow.
Free cash flow growth. This is pillar number 7.
You have your calculator out, my friend?
I'm ready, baby.
So we're talking about 3 billion, 3.1 billion, let's call it 4.3 billion.
Divided by 3?
Yep.
3.5.
So 3.5 times 20. They're growing. 70 billion.
Market cap of 380?
And then 330.
330.
This is 330. So guys, we need to fall by 80%. I mean, it's a big drop. But you know what? Look at their PE. If we go back to their PE, what was it? Look at that. 88. What's 80% lower? It's 17. Okay, so we have growing free cash flow. There's a check mark there, but the price of free cash flow wasn't there. And the other thing is a lot of shares increasing and revenue increasing fast. I bet they're doing acquisitions. I don't like acquisition growth as much as I like organic revenue growth. Organic revenue growth is, this is the company by itself. Without adding more companies, they're still generating more and more revenue.